Good morning, everyone, and thanks for joining us. I'm Robb Emmett, and I'm a video director, editor, and the owner of a video production company called Win-Win Productions. Today, I'm producing this webinar with some business colleagues who are specialists in different areas, and they're going to discuss some important ideas that we think are important for nonprofit organizations to understand. How does a nonprofit come back successfully from a historic pandemic and economic shutdown? That will be the overarching theme of this webinar series, of which this episode is the first. Today's webinar is titled Cash Flows for Non-for-Profits. We'll explore best practices for non-for-profit cash flow planning and how they can ensure financial sustainability in transitions like we're in now. We'll have a brief introduction about this topic from our featured panelist, Jennifer Denil, and then the panelists will discuss. We're not taking live questions in these webinars today. However, I will pass on your questions to the panelists if you have them, and they'll get back to you by email. So if you have a question, please email it to me at my address, which I'll give to you again at the end. Right now, I'd like to introduce our panelists. First, Bill Hassett and .org Services provide strategy and revenue thinking and action for nonprofits across the Chicagoland area. Bill uses his many years of accounting, finance, and nonprofit board experience to help nonprofit leadership think through their ideas about strategy, their why us. He also challenges them to think about how they carry out their mission. The size of the nonprofits he serves ranges from the startup idea recently invented around a kitchen table to the third generation agency that needs to prepare for new challenges. He even works with the final stage agency that has the courage to merge or partner when it can't achieve success on its own. Bill was a partner in a CPA firm for many years and has served on more than a dozen nonprofit boards in roles that included all of the board officer positions, including board chair. He welcomes the chance to talk nonprofit with people interested in accomplishing community helping action. Next, Mary Erlain is the founder of Peak Development Strategies. She believes an organization's foundation is their people, the employees, management, and owners. She is a published author of business books. Her most recent books address the opportunities and challenges of the multi-generational workforce. Generational diversity is a root cause of many of the problems in business today that affect growth, productivity, and profitability. Mary says, as the constraints of doing business ease due to the pandemic, don't forget your people. She believes that a culture needs to be rebuilt in order for a business to sustain itself going forward. And lastly, our featured panelist today is Jennifer Denil. Jennifer is the owner of JD Financial Associates. She is a certified public accountant who provides fractional financial controller services to closely held businesses. Jennifer assists her clients with understanding cash flows, increasing profitability, and identifying cost savings from operational efficiencies. Her clients benefit from her 30 years of financial experience without the cost commitment of a full-time employee. Most recently, she has assisted many companies of varying sizes with navigating the CARES Act funding opportunities. So thanks to you all for being on our panel today. Today's topic is cash flows for non-for-profits. We'll start with a brief overview of the topic from Jennifer, then open it up for the whole panel to discuss and wrap it up in about half an hour. So let's begin. Jennifer, what are some of the biggest challenges to non-for-profits right now?
Well, one of the most recent things that's come up in the past couple months is, of course, the federal CARES Act, which provided for loans to small businesses, and then it also provided for loans to not-for-profits in order for them to continue to pay their people over the past months and in the coming months as well. And I just want to point something out to our not-for-profits that the evolution of the forgiveness of the loan and whether you need to repay the money is still evolving. It's changing daily at this point, but there are a couple key things that you can keep in mind right now as you're in the middle of spending your loan amounts to try and maximize what you can keep to minimize what you may have to repay in the form of a loan. And the first thing to keep in mind is to keep your head count up. So the biggest effect on the amount you can keep is maintaining your full-time equivalent head count from the beginning of the year. So it's pretty easy in most cases to do a simple full-time equivalent head count from January, February, and then monitor your payroll on a weekly or bi-weekly, monthly basis, whatever your pay periods are, during the 8-week period after you have your loan, to make sure you can keep that head count as close to your January, February numbers as possible. There are a number of other calculations that also affect the amount that you can keep versus repay, but that's the biggest one that could affect the amount you can keep. Another thing to consider, and this is, again, continuing to evolve for those not-for-profits that get federal grant funding, there may not be a way for the money that's spent on personnel that work on the federal grants, you may not be able to count that money towards what the forgiveness portion of the loan. And again, this is all in flux right now. And it could change again next week, but just something to keep in mind, that if you have a federal grant and you have people that are covered under that grant, portions of that payroll may not be covered. Now, another thing to keep in mind is depending on what your programs may be in a lull right now where your employees are not even working on those grants. So that's something to keep in mind as well as you're working through your allocation of your payroll costs. Maybe during this time period, those payroll costs are not eligible to those grants, in which case they would may be eligible for the PPP forgiveness. In any case, make sure you're staying in touch with your accountant, your CPA, and your banker during this time period to communicate with them about what's going on with your operations, and make sure you get all the current information about this evolving forgiveness calculation. And talking about that, I'm going to roll right into the cash flow planning for not-for-profits, because many not-for-profits have never had loans before. And because of this PPP, it's actually a loan. And so if any portion of that is not forgiven, forgiven means you can keep the money and you don't have to repay it. The portion of the loan that is not forgiven by the federal government, you will need to repay. And again, this is evolving. It may be a 2-year repayment plan. It may be a 5-year repayment plan. But in any case, for these not-for-profits who have never had loans, you'll need to plan to make sure that you can pay for that monthly loan repayment every month going forward when the repayments begin, and whenever the federal government decides that's going to commence. So make sure that you build into your cash flow planning that you have money set aside to repay this loan. There's a lot of best practices that for-profits use that can be applied for not-for-profits as well. And one of the key things that I do with many of my for-profit entities, and I've worked with not-for-profits as well, is a cash flow planning schedule. Now, this is different than a projection or a budget. This is truly planning out how you're going to receive your money and spend your money. And for some not-for-profits, there may be some seasonality to this. For a membership organization, they may have dues that they collect once a year, and they have a sizable inflow of cash that then they have to live off that money for the rest of the 12 months until they do the dues billing the next year. Same thing for a charitable type organization where they might get a large influx of money in December and January with people doing their charitable giving for their income taxes. Again, you need to just plan to how are you going to set aside that money? What are your monthly costs that you need to use that money for over the next 6 to 12 months? For this immediate time period right here, I'm recommending that organizations do a weekly 13 to 20 week cash flow schedule where they're planning out what cash do they have in the bank, what do they think they're going to be collecting, and then what do they need to spend it on in terms of what are your personnel costs, which is really the largest cost for most not-for-profits, or facilities costs is usually the second largest. Also use this as an opportunity to evaluate all your different programs and the profitability of each program. In the for-profit world, a business will divide up their sales into different lines of business. And there's different logical ways to divide this up. In the not-for-profit world, the best way to look at it is what are your different programs that you're providing? And a good way to look at that is how are you getting your grant funding? That may define what your different programs are. How do you define your programs on your Form 990 that you file at the end of the year? Because there you're required to divvy up your costs among all your programs. So look at each program as a standalone and really evaluate each program against what the core purpose of the entity is and the profitability of each of those programs. And it may be that one of the main core programs of the not-for-profit is a loss leader, but that's the reason for the entity's existence. But there may be some ancillary programs that the not-for-profit does that maybe have outlived their useful life. A couple of years ago, they were profitable and they made sense. And at this point in time, maybe they should be discontinued. And that may mean taking a look at your staffing, rerouting staffing to other programs, or evaluating the need to continue with a particular staff member, which is, of course, very hard to look at this point. But looking at it from a global perspective, thinking about it from a profitability, can you continue to retain that staff person if that program is no longer self-sustaining? It's also important, as I said before, to stay in touch with your bank and keeping them apprised of what's going on, even if you don't have any loans. Making sure that they know what's going on, building that relationship with your banker. We're also expecting that there may be a large impact on insurance costs in the coming years as a result of everything that's going on right now in current events. There's expected to be a lot of litigation related to COVID-19 claims, which will involve insurance companies needing to defend those claims, even though there may not be any reasonability basis for someone to make a claim. It still needs to be defended and addressed by very expensive attorneys. So that, of course, will roll out and affect insurance rates in the coming years. Another thing to keep in mind, if you're struggling with cash flow right now, and maybe need to be getting a loan from the bank, think about what you have in the assets of the not-for-profit that could be collateral for a bank loan. And again, this comes back to having a good relationship with your banker, making sure your banker knows what your operations are, knows what your purpose is, and is involved in your business periodically. Many not-for-profits will have their banker actually act as a director on their board as well, so that that banker can really know what that not-for-profit is doing.
Jen, could I jump in with a question here?
Yeah.
Nonprofits spend a good amount of time between the staff and their boards to figure out a budget each year. And what
Right.
I'm saying is this is not the budget anymore. You're talking about a different kind of reporting and watching. Can you speak to that a little bit?
Right, yeah. And a budget still needs to be done because that provides the roadmap for the not-for-profit to make decisions against over the course of the year. But separate from that is how the cash flows move through the organization over the course of a 12-month period. And there could be some seasonality to that, and making sure that if you get a large influx of cash, that you don't go on a spending spree. Making sure you set that aside and take a look at your budget, what you have for the next 12 months. Even though you may get that money in one lump sum, think about how do you need to spend that over the next 12 months and how much do you need to be setting aside to make sure you can cover those costs in month 11 and 12 when there's going to be virtually no cash available. So a cash flow is different. You need a budget, but you also need to plan out how your cash flows are going to move through the organization over a 12-month period.
Maybe I could focus on something else that you said that I thought was really interesting. In the course of this cash flow planning, it may be that circumstances have changed. I would say almost for everyone, circumstances have changed. And so I think what you're saying is that maybe those changed circumstances mean how much even more important this cash flow planning is, not only because of the timing, but also because your donor pool may have dried up, or maybe on the other hand, maybe you've gotten some new donors that you didn't expect. Could you talk about that a little bit?
Right. Yeah. It's especially important right now, and even for healthy organizations that maybe never had to think about cash flow planning are having to think about it now, because they're, as you said, Bill, they're seeing that donor base kind of dry up, and I think that's going to be just a momentary thing. I think that this is a temporary economic issue that the country will work its way out of, which is different from the recession that we had around 12 years ago, which was longer term. But in the meantime, even healthy organizations need to be thinking about what money do they have in the bank, how are they going to be spending it over the next 3 to 6 months, to make sure 6 months from now, make an assumption that maybe this extends on a little bit and your donations are still going to be a little lower than usual. 6 months from now, can you still keep your doors on and still be serving your clients, serving your membership, fulfilling what your purpose is, your not-for-profit purposes. So it's a different way of looking at things. You still need budgeting. Budgeting helps an organization make decisions about like personnel changes, and the budgeting also, this would also go in the budgeting and the cash flow with evaluating your programs in terms of a line of business concept and profitability of the program. Does it still serve its purpose? Is it self-sustaining? Maybe it's something that needs to be parked for now and brought back up a year from now, if you think it's still meaningful to the organization. But it is a different way of looking at things.
So, Jen, what are probably top 2 or 3 mistakes people are making when they leave these organizations? Perhaps emotions are driving cuts, in the budget, and maybe seeking ways to increase cash flow, but actually they end up shooting themselves in the foot.
Right. Yeah. I mean, there's definitely a lot of anxiety out there right now. And I find that most times, once I sit down with a company or organization and help them understand the cash flow and how things are moving and how that translates into the budget that they had already set up, once they can see in black and white how cash is going to be moving, I find that alleviates a lot of the anxiety and what might be a knee-jerk reaction to start cutting staff because there's no money coming in. By looking at it longer term and doing some planning, better management decisions can be made instead of a knee-jerk anxiety reaction of eliminating staff that maybe is a key person that you need to keep on board and you need to have with you 6 months from now. On the other hand, if it's someone who's been with the organization quite a while, it may be feasible at this time to lay that person off, let that person go on unemployment, and then bring them back 3 to 6 months from now. If you have some confidence that person might still want to return. So yeah, it's interesting times right now. I'm seeing companies and organizations utilize the unemployment as almost like a budgeting cash flow tool for their business at this point, where they're laying people off for a period of time, letting them take advantage of the current unemployment that's out there and absolutely planning on bringing them back at a point in time. This also could affect your PPP loan. So these are a lot of moving parts that you need to talk to your accountant and your banker about to make sure you plan appropriately. And it may be okay that some of your PPP loan is not forgiven, because that, at the end of the day, that could be some cheap money that you could utilize over the coming years.
Jen, a quick question. in Illinois, some businesses in the shutdown were considered essential, others non-essential. Where did non-for-profits fall in that? Did it depend on what kind of work they did that determined whether they were essential or not, or were they just all non-essential?
I think I might pull Bill in on this as well, but I believe it followed the same lines as the for-profits, and it really depended on what the purpose of that not-for-profit was. I'm familiar with a not-for-profit that serves sexual abuse victims, and they have been extremely busy over the past 2 months with people being laid off work. There's just more opportunity for families to have more internal struggles than they might have when everybody's at a full-time job. So in that case, definitely they're an essential service. Other not-for-profits, say a professional membership organization, that can exist. In fact, many of those entities do exist virtually right now, so that would not be an essential service. So it's kind of followed the same lines as the regular businesses that we see on a day-to-day basis.
Right, I agree. And the only thing I might add is maybe if you think of a spectrum, at one end are the agencies that deal with social service, with human need, are definitely essential businesses. Perhaps at the other end might be more the cultural institutions that are museums, art collections, and things of that nature, where they pretty much have had to shut their doors and maybe are doing a little bit of programming online, but are not essential in the sense of even of allowing employees and patrons to be in the physical premises.
Right.
One additional thought on that, and you mentioned the nonprofit around the sexual abuse. They have been prevented from going into ER. So, that's just one example. Even though you have a nonprofit that is an essential business, they have been crippled oftentimes in just being able to serve the folks that they want to serve as a result of the shutdown stipulations that are in place. And in addition, I think universally nonprofits have been affected from a donation standpoint. It's hard to find one that's thriving right now with donors.
Right. You bring up another point too, Mary, that with everything that's going on, that might even be an additional cost that certain not-for-profits need to consider, is paying for locating and paying for personal protective equipment so that their employees can still continue to service the clients appropriately. So that's definitely an unplanned cost that was not budgeted for. But the organization needs to spend that money in order to continue to serve their purpose. And this kind of leads me to my next thing I wanted to talk about, which was not-for-profits thinking about creative fundraising ideas. And how can they continue to stay in front of their donor base, their local communities, and stay relevant and keep those people updated on that they still exist, they're still doing what they need to be doing. And that's where someone like Robb can really be helpful, making short video snippets that can be posted on Facebook, Instagram, sent out to your donor base via email, put on your website to keep them updated on that you're still doing activities. And that's something that could easily be done following the Illinois rules that are still in place right now. Make sure you stay in front of your donor base. One thing I've told my for-profit clients is don't lay off your salespeople. Make sure your salespeople are still making phone calls, still staying active. The same thing applies to a not-for-profit. Just because you're theoretically shut down by the state of Illinois, you still need to keep moving forward with your purpose and serving your clients and keeping everybody informed on what you're doing. Your donors are your customers, and you need to keep them updated so that when things start to get busy, cash flow starts to improve in the economy, they want to continue to donate to your organization. They see how you've gotten through this, you've continued doing what your purpose is, and they then want to support you even more, most likely.
I might throw in, Jen, that that an agency doesn't want to forget about its volunteers, highlighting the maybe step above that volunteers are doing right now, or
Right.
companies that maybe are substituting for the older group of volunteers that perhaps aren't physically able to join the service activity right now, but emphasizing the important work that they're doing and highlighting them in some of your messaging is very important right now.
That's a great point, Bill. A lot of not-for-profits rely on older adults as their volunteer base, and that has dried up. So how can you reach a whole new generation of people to help you with your volunteer work? And a lot of organizations rely on volunteers to get a lot of their missions completed. And how can you recruit a whole new generation of people? And this leads right into Mary's expertise, which is, using that social media. Younger people are social media people, so make sure you're using that. Some organizations actually engage a social media expert to make sure that they're posting things timely and frequently to keep younger people engaged, and then that will be your new volunteer base going forward. Another idea, Bill, that you had brought up to me, which I loved, and I've actually noticed a couple not-for-profits doing this, is virtual fundraisers or virtual auctions, and where the not-for-profits that I've seen, it actually circulated the not-for-profit fundraising through Instagram. And granted, the donations that they were requesting were very small through the Instagram account, but it was a way of using Instagram to stay in front of their donors, their volunteers, their community, getting small amounts of money in the door. And also by doing that, now you're building your donor base, because asking someone to give you a small donation amount usually will lead to a larger donation amount down the line. So it was a good way. It addressed many of the issues that not-for-profits are struggling with right now. And what these programs that you're developing right now, what can you keep around after things reopen up? It's with the younger generation, millennials, thinking about the social media programs you're developing right now to stay relevant. Those should probably be permanent additions to the organization going forward that they continue to maintain. Don't think this is a temporary thing, especially people who are attached to Instagram and Facebook and other internet communications. If you're taking the time to build up that base right now, you want to make sure you stay with them and keep them informed going forward, even a year or two from now.
My son's girlfriend actually is the social media manager at the planetarium. And you wouldn't necessarily think the planetarium, which is a glorious facility that you need to go in and actually experience, she became an essential worker.
Wow.
And I think, and the planetarium became rather successful at living in the world of social media, even though I think we were a bit short-sighted to only think of it as this facility, out on the lake. And so I think that stands as a perfect example that your social media, your videography, your marketing people are the essential workers of nonprofits beyond just your example given social workers or other such that are actually serving the folks or the puppies or whatever it is. They have become the essential workers during this particular time, and I absolutely agree with you. Lesson learned, that doesn't mean we cast them aside when the world reopens. It's an opportunity to build exponentially.
Right, right. Make sure you have, this maybe someone that you brought in as a temp right now, build them into your budget as a permanent addition going forward. Or if you're outsourcing it to someone right now, again, keep that in your budget as a permanent addition, because it's absolutely relevant. We're in a different place right now than we were 10 years ago, much less even 6 months ago.
This is probably an area where the arts and cultural nonprofits have a bit of an advantage, because with everyone at home, people are looking for content to amuse and entertain themselves. And so the cost, maybe it's a low cost or a no cost, brief sampling of your music, of your art, of your planetarium content is that perhaps the hook that brings in some future donors. Right now it's a give, but it's an investment in the future.
That's well said, Bill. What he said.
One final thought, as we were getting back to fundraising, there's this concept in sales and marketing advertising that it costs more to find a new client than to keep a current one. And I assume it's even more amplified in non-for-profit. It costs more to get a new donor than to keep a current one. Is that accurate?
Absolutely. Yes, that's true across the board.
Sure.
Very much. There's a tension sometimes when the donor gives money. They give it sometimes with restriction or with an expectation of specific results. And so sometimes the effort is not done when the donor's made the donation. It continues in the reporting and follow-up that occurs after the money's received. So evaluating a donation in part is what is the effort to comply with what the donor wants done with the money.
Okay. Well, I'm gonna wrap it up here because we are out of time. We've come to the end of what we wanted to talk about here. So just want to thank everybody for joining us, and also wanted to mention our next webinar will actually feature Bill Hassett, talking about partnerships and mergers, and he'll be discussing what kinds of questions those overseeing a nonprofit need to ask now, and about its purposes and activities, and how they can build creative partnerships to help it survive. And also, if you have any questions about creating video content during the shutdown, to keep in touch with clients and donors like we just talked about, creating video to promote your business or nonprofit on social media, or if you'd like help facilitating webinars like this one, please contact me. We can talk more. Also, you can take a look at my website to see examples of my work. I'm Robb Emmett with Win-Win Production. I want to thank all of our panelists today. Thank you for joining us today. We hope you'll be well and able to work through these interesting times. And we just wish you a good day, everyone. Thanks for joining us.